Welcome back to the Deep Dive. We've got a really insightful collection of source material that you've sent us.
It's quite the stack.
It is, yeah. It's all centered on a very timely report detailing some pretty dramatic international events, specifically as of January 8, 2026.
And our mission today is to take all of this and really unpack a major geopolitical flashpoint.
That's right. We're talking about the recent U.S. military action in Venezuela, the one that culminated in the capture of President Nicolás Maduro.
It's a huge story.
A huge story. And, when you hear Venezuela, the immediate headline is always oil. Crude oil, massive tankers, OPEC. That's the narrative.
It is, but what's so fascinating when you dig into these sources, really analyze them, is the surprising central theme that emerges.
Go on.
While the world was focused on the tactical details, Operation Absolute Resolve, the material we have here clearly shows that control of a completely different commodity, gold, has been the persistent underlying engine of the entire U.S. policy.
That's a critical shift in perspective, isn't it?
A huge one.
We're looking beyond simple resource extraction and into the financial architecture of how modern sanctions are enforced and, crucially, how nations try to evade them.
Exactly. So our deep dive today is focused on that strategic importance of gold in modern statecraft, how this one precious metal became the key to enforcing or breaking global isolation.
We need to know not just what happened, but why gold was targeted so specifically.
We're dissecting the financial strategy that underpins the whole geopolitical tension.
Okay, so if we trace the foundation here, these tensions, the sanctions, they didn't just appear with this military action.
Not at all.
They have a long history. It starts back in, 2015 under the Obama administration?
That's right. And initially, they were just targeting specific officials, individuals tied to the Venezuelan government.
A much smaller scale.
A slow escalation that really laid the groundwork. The key moment, according to these sources, was when the policy shifted from targeting people to targeting the economic levers of the state itself.
And that's when things really ramped up.
They ramped up dramatically. Sanctions expanded to choke off Venezuela's main revenue streams. So they hit the state oil entity, PDVSA, which is the nation's lifeblood, their primary source of cash.
That's right.
And they also targeted the central bank, which is the mechanism that manages all their foreign exchange and reserves.
So that move was basically designed to make any kind of legitimate international trade impossible.
Exactly. But the pressure didn't stop there with oil and banking. And this is where the focus on the physical asset, on gold, becomes so critical.
Right, because the sources point to a very specific legislative action, Executive Order 13850.
November 2018.
And this wasn't just a general slap on the wrist. It was incredibly precise.
Yeah.
It explicitly banned U.S. dealings in what it termed Venezuela's corrupt or deceptive gold transactions.
And that specific targeting, that language, connected the financial restrictions directly to the source of the wealth. The stated intent was to curb revenue streaming out of Venezuela's Orinoco mining arc, the Arco Minero.
Which is a massive area.
Massive. It's estimated to hold vast gold reserves. But crucially for the sanction regime, the sources note this region has been heavily associated with expanding illegal, unregulated, and often highly violent mining.
So by labeling those transactions corrupt, policymakers gave themselves a solid legal foundation to enforce the ban globally.
A very powerful tool.
So this brings us to the core question. If the goal is to cut off state revenue, and oil is Venezuela's massive primary export, why divert so much energy, diplomatic and legislative, onto gold?
Right.
Why is gold the Achilles heel, rather than just the petroleum barrels?
That really is the essential question. And the answer, it lies in understanding the mechanics of financial isolation in the modern world.
Okay.
So when a country is sanctioned, its biggest vulnerability is its reliance on established global payment systems. Oil moves via massive infrastructure pipelines, specialized ships, and payments processed through global banks.
Meaning those transactions are, they're pretty easy to track, to monitor, and to freeze.
Precisely. If a nation is cut out of the SWIFT system, that's the network that lets banks worldwide send instructions securely, they can't get paid for their oil, even if they physically ship it.
SWIFT exclusion is the financial equivalent of just turning off the lights.
It is. But gold is different, and it's different because of its immense portability.
Walk us through that. How does a hard asset physically bypass these incredibly sophisticated financial restrictions?
Well, just think about the logistics. You can't put crude oil on a cargo plane and fly it somewhere without this massive, noticeable infrastructure.
Yeah.
Gold, especially refined bullion, is incredibly valuable in a small, dense package. The sources are clear. It can be moved on small aircraft, across porous borders, or through informal shipping networks.
And you don't need the traditional banking system.
Not at all. You don't need it to process the payment. It can be traded for cash, for goods, for services. It creates immediate liquidity completely outside the formal dollar-based economy.
So it just sidesteps those SWIFT exclusions.
It's the perfect tool for an isolated state. It becomes an essential mechanism for economic survival.
And this is where the analysis gets so critical, because the source material provides these staggering details that illustrate the sheer scale of this evasion.
It's incredible.
The U.S. Treasury actually had to specifically sanction the state gold trader Minervan back in 2019.
Which tells you how effective the other sanctions were. It pushed the government toward gold as its last resort.
And those efforts were clearly warranted. The reports in this analysis, they paint a really clear picture of reserve depletion. The data indicates that somewhere between 7.4 and 8 metric tons of gold were actively smuggled abroad.
Just to finance operations.
Exactly. And that severely depleted the nation's official reserves. That's not just a minor loss. That's a deliberate liquidation of national wealth just to keep the government solvent.
And 8 tons is a staggering volume to smuggle.
It is. And the economic significance is underlined when you look at the historical context. The analysis mentions that even before the sanctions really intensified back between 2013 and 2016, Venezuela had already shipped $5.2 billion worth of gold.
Wow. So it was already a critical economic lifeline even before the maximum pressure campaign.
It wasn't a new phenomenon at all. The sanctions just supercharged their reliance on it.
And when you connect that data to the bigger geopolitical picture, the U.S. strategy becomes much, much clearer. The goal is broader isolation.
Right.
Sanctions work best when they're inescapable. So by controlling what you could call the triad of isolation, oil sales, traditional payments, and the physical flow of gold, they tighten the net.
And that dual action, it restricts Venezuela's ability to trade on the open market and, maybe more importantly,
It cuts off its ability to conduct effective trade with key geopolitical rivals. Think Russia, Iran, Turkey. Nations that might otherwise offer alternatives to dollar-based trade.
gold is the commodity that allows regimes to survive.
And controlling it removes that option.
So this financial pressure, driven by this highly strategic gold strategy, it inevitably led to a kinetic response. Let's trace the dramatic sequence of events that brought these long-running tensions to a head.
The event we're talking about, Operation Absolute Resolve, happened on January 3, 2026.
Just a few days ago, based on our sources.
It was a high-stakes, direct intervention. It involved U.S. forces moving into Caracas to apprehend the Venezuelan president.
And the operation was incredibly bold. Coordinated strikes on air defenses, a raid on President Maduro's own residence in Caracas. I mean, it reads like something out of a thriller.
It was an extremely complex and high-risk maneuver. The sources detail it pretty well. Delta Force commandos supported by airstrikes, and they reportedly overcame heavy fire from presidential guards to secure their targets.
And in the end,
Both Maduro and his wife, Celia Flores, were apprehended. They were flown out of the country, destined for New York. The tactical success was undeniable.
and the logistical planning for something like that in a dense capital city must have been immense.
Unbelievable.
Did the source material give us any insight into the context leading up to the raid? Because an action like that doesn't just happen in a vacuum.
Absolutely not. The analysis frames the raid as the culmination of intense escalating pressure. It followed rejected offers for exile, which suggests a diplomatic breakdown.
So Totzing wasn't working.
And crucially, it also followed prior targeted strikes on smuggling ports that were explicitly linked to organized crime groups like the notorious Tren de Aragua.
So they were targeting the enablers of the illicit trade, the gold and the oil, just before the final move.
Hitting the economic pressure points militarily, yes. And then came the immediate political outcome post-capture.
Which confirmed the focus on resource control.
It did. President Trump's statements indicated the U.S. would oversee a transitional government, with very explicit plans for American firms to regain access to Venezuelan oil assets.
But here's the key point for our deep dive.
The source notes that the seizure and restructuring of the gold infrastructure, particularly in the Orinoco mining arc, were implied and central to that transition planning.
Signaling that control over the flow of hard currency, not just oil production, was paramount.
It always was.
Okay, so we've covered the history, the financial strategy, the dramatic operation itself. Let's shift our focus to the global implications. What does this deep dive into Venezuela's gold mean for global finance, for the future of commodity markets?
This is where we have to zoom out and engage with a core geopolitical concept that's cited in the analysis, which is the challenge to dollar hegemony.
Okay,
Venezuela is a powerful cautionary case study for global powers.
let's break that down for everyone listening. What is dollar hegemony in practice, and why do uncontrolled gold flows threaten it?
Well, dollar hegemony is essentially the U.S. dollar status as the world's primary reserve currency. It's what most international trade, especially oil, is denominated in.
And it's what central banks hold most of their wealth in.
Right, and this status gives the U.S. immense financial and political power specifically through the use of sanctions. If you transact globally, you touch the dollar, and if you touch the dollar, the U.S. Treasury can target you.
But uncontrolled gold flows challenge that entire system.
They challenge it entirely. When states can trade gold for goods or services, they're creating alternative liquidity markets outside the traditional dollar system.
And the existence of those non-USD commodity flows starts to erode the dollar's dominance.
It offers regimes a path to achieve what the sources call regime certainty, economic survival, independent of Washington's financial control.
So that makes gold a strategic mechanism for challenging the entire global financial order. It's not just a reserve asset.
Absolutely. The geopolitical consequence is vast. It proves that there's a viable, though very difficult, path to bypass the very mechanism that makes U.S. sanctions so potent.
And we should pause to mention the significant human and environmental costs here, too.
A tragic part of the story.
The analysis says this pressure on opaque mining operations has been linked to fueling violence and led to the rapid expansion of illegal mining into protected areas.
There are always negative consequences, but let's turn back to the immediate economic impact of the January 3rd action. The gold market reacted instantly.
Right. Prices hit one-week highs right after the strikes.
They did.
We usually interpret that as classic safe haven demand. Geopolitical uncertainty sends investors running for hard assets.
Yes, but the source suggests a bit of a contradiction, or at least a nuance there.
How does that immediate short-term panic from investors relate to the long-term deliberate accumulation by central banks that's mentioned in the same report?
That is a highly insightful distinction. The short-term spike is indeed investor panic, a flight to quality. But the analysis connects this to a much broader ongoing trend. Central banks globally are accumulating reserves at an aggressive pace.
And that's not driven by investor fear.
No, it's a strategic, long-term political calculation. It reflects what the sources call a collective wariness of fiat vulnerabilities.
Okay, another key term to unlock. Fiat vulnerabilities. What does that mean in this context?
Fiat currency is government-issued money, like the U.S. dollar, that isn't backed by a physical commodity like gold. Its value is based on trust in the government.
So fiat vulnerability
Refers to the risk that a currency can be devalued, or worse, that your access to it can be suddenly restricted or seized, which is exactly what sanctions do.
and the events in Venezuela illustrate that fragility perfectly.
Perfectly. So central banks accumulating gold are essentially signaling their desire to de-risk their reserves from political control and the volatility of government policy. Gold is a strategic hedge against financial warfare.
And just to add that last bit of nuance, the analysis reminds us the Orinoco Arc produces gold with silver byproducts.
It does.
But the policy, the strategy, clearly emphasizes gold's value above all else. Silver has industrial uses, sure, but gold is the true monetary and political metal.
It is the commodity of ultimate recourse for an isolated state. Absolutely. It's the universal currency of last resort.
Okay, let's bring this full circle. Our sources have provided a clear roadmap, and it shows that gold is so much more than just an investment commodity.
So much more.
It's a fundamental tool for state survival, a medium of exchange to bypass sanctions, and because of that, a major factor in global geopolitical leverage.
That's the core takeaway. And looking ahead, the source material indicates that future developments are going to revolve around the intricate details of transitional governance and resource access.
Just as the U.S. statements indicated.
Exactly. We should remember the core sanction frameworks haven't been altered. They're just now being enforced under U.S. oversight, redirecting control. The discussion will pivot to loosening ties with adversaries like Russia and Iran as a necessary step for Venezuela's economic reintegration.
Fascinating. So what is the final idea for you, our listener, to mull over as you digest this and watch the global stage unfold?
I think it's this. The events in Venezuela illustrate the absolute intersection of hard commodities and global finance. Going forward, don't just track political statements about the transitional government.
Look deeper.
Look deeper. Focus keenly on the practical outcomes related to resource access and infrastructure control. How will this new access for American firms and the seizure of the illegal gold infrastructure, how will that ultimately affect broader global commodity flows and the delicate balance of international relations?
The financial war over hard assets has just received a powerful kinetic confirmation.
It certainly has.